here now with Joe Mazumdar, editor at Exploration Insights. Thank you for being with us.
Great, thank you for having me.
So the sentiment of this year's PDAC is a little different than previous years because of the fear surrounding COVID-19. So what has been your main takeaway from the conference?
Well, it seems like there's less people here, and some delegations couldn't make it or canceled at the last minute. So the overall number of people seems to be a little bit modified, but I don't think that that's a reflection of interest, more so, like you said, of the potential coronavirus impact. But in terms of the mood, it's definitely one of trying to look for opportunities now in this volatile market. It's definitely more of a buying than thinking like you're trying to catch a falling knife or anything like that. The rate cut right now with in the U.S. has obviously helped gold, and the market, after last week's plunge, has rebounded nicely on precious metals.
And so on that note, let's talk about the state of the mining industry right now and where the money is to be made.
Where's the money to be made? I mean, it depends who you are. If you're in the retail sector, you got to figure out what commodity you want to focus in on right now in precious metals, with potentially, a V-shaped recovery after last week. Gold didn't really go down that much, but the stocks did. A lot of stocks went down more than 15 to 20%. So, when gold price goes up and you have that V-shaped recovery, producing companies is the better place to play, and then that moves down into exploration companies as well. But exploration companies, really to move, they really need to have results. It's got to be really results driven, whereas with a producer, a higher gold price hopefully just makes them more money.
Absolutely. And so, as you mentioned, this is a buying time, and so for people looking to get into the market, should they wait even longer?
The thing is that right now with the volatility in the market, the VIX, usually when that spikes, gold usually benefits as a safe haven demand asset, but the impact is usually ephemeral. It's not very long. But what's going to take gold higher, and has taken gold higher, is the impact that the virus has had on monetary policy, such that we've had a rate cut, and that is good for gold, because right now we're sitting on over $13 trillion in global negative yielding debt. And for gold in the medium to long term, that's very supportive.
And given the state of the market right now, what are some of your top picks?
Well, in terms of getting that leverage to the gold price, Pan American Silver, a high market cap silver producer that's got a few options on development with restart of Escobal. They've had a discovery at La Colorada, a skarn under their producing asset, and they've also got another development option, in Navidad. That's one of them. And then also I like development plays, just because development plays in the gold sector, in all sectors, tend to get discounted heavily, and rightfully so, because of execution risk, technical risks, and financing risk, especially in this environment. But if you can find one that can mitigate those risks, like something like Bluestone Resources, that's in Guatemala. They've got a feasibility study now. The Lundin Group, the family, has about 33% of the shares outstanding, and so they're really keen on putting this thing into production, and they've done a great job at Fruta del Norte, and a lot of those same people are looking right now at helping at Bluestone right now and developing Cerro Blanco. And then the other one on the exploration side that I like, because of its grade continuity, thickness, jurisdiction, would be High Gold, which is in Alaska. So right now those are my three top picks.
Great. Well, thanks for joining us, Joe.
Okay. Thank you very much.